Rose, Longwood currency trading. Good morning. It's a cold, kind of snowy winter day up here in New England. It's January 5th, 2021, and sad tale of trading today. Not too bad, but you know, what are you going to do? You can probably hear my dog whining in the background. He wants to go out and play in the snow. I'm getting my coat on, so let's go out and talk. All right, here we go. We're heading outside. You see it's snowing a little bit out there. Yep. There's the bow dog. And we're going to walk out this way. You might notice something different in the driveway. Let's go out here a little bit. Man, it's slippery. Holy crap. The tank is gone. No car. Huh. The tank has been sold. So I'm on the lookout for another car, and we'll see what happens. I had mentioned in another video, it might be a truck, so we'll see about that. So, gotta collect up the dog. Bo? Hey, Bo! God, he's the one that wanted to come out. Bo! No, let's walk up here in a little bit. I could edit this stuff out, but you know, it's so nice to have the little travel logs here in New England. And I'm walking through the woods. I can't find the dog. Oh boy, he's probably doing his business. So, yeah, not such a great trading day today. I really fucked it up. I was up 0.67% on my risk, and I explained all that in Tuesday's video about how you calculate what your profit or loss is as a function of your immediate risk, your bank size. So there's the dog. Come on, Bo, come. Hey, hey, come on. We're going for a walk. Let's go. So, the long and the short of the story here today is I'm 0.3% down on my risk, which is nothing. 0.3%. You know, you can take 2% on a trade and be okay. Take 2% on a day and be fine as a loss. And I've got 0.3% loss. I was up probably, I don't know, 1% or so earlier in the day. I didn't trade that long. I traded longer than I wanted to. I came in early in the morning. There wasn't really anything there on the currency pair that I trade. And, hi, Bo. So I just had a cup of coffee and sat down. I was doing some other stuff, and I had seen from the price action the potential for a price to do something. And I'm really not a fundamental trader based on news and shit like that, and so I'm very well aware of the turmoil that the United States is in right now with the Trump challenging the election results and the COVID pandemic and the closing of some of the major retail stores and the tremendous stress that the economy is undergoing right now, and in comparison to difficulties that the UK is going through, because I trade the pound dollar, the issues with the Brexit and them straightening all that stuff out, and the money that it's going to cost the British economy in order to get this stuff squared away. So I know all that stuff, and U.S. stock market has been going up and up and up, and so the U.S. stock market was down today, which would indicate the stronger dollar. but the dollar index itself was weak. It's down below 89, for God's sakes. And so I should have just sat on my hands today. But the chart was, there was some good volatility, some good momentum going on, and there was an indicator there that something could potentially be afoot, as Sherlock Holmes might say, for a nice move under certain conditions. So I said, well, look, I'll set some limit orders and continue on with my work. And so I set those orders, and as I'm in getting a cup of coffee, I hear my phone go beep, and I go, oh crap, what's that? I go, order hit. Okay, so let's go in. So I got a nice order. It's moving really nicely in my direction. I took 5 pip profit off the table. I broke that down, and then let the thing ride a little bit further, and it started to turn around on me, and I thought, well, I just let this run. I had a 20 pip, 25 pip profit target, so I'm a scalper, day trader, and so we'll let it run. We'll let it breathe a little bit. I'll pull my stop down to break even, and and we'll see what happens. And the fucker turned around, stopped me out. So I made 5.5 pips or 6 pips, and that was on one lot that I had peeled off. But my risk for the trade was 3, and so the percentage gain wasn't as high as it, because my risk was high. I was on a different thing. Hey, Bo, we're going this way. See, he thinks we're going down there through the woods. Yeah, we're going this way, Bo. We got to go this way. Oh man. So okay, so that's fine. So then price swings around and starts forming a nice reversal structure, sort of like an exhaustion, and so, well, that just reinforces my my thoughts on the original trade itself. You get out, you get stopped out. If the idea remains valid, then you go back in. So I put a limit order in, and it wasn't too long before that beeped for me. Said, okay, great. I set my 8 pip stop, and the thing turned around, hit that fucking 8 pip stop right away. It's like, boom. Well, this isn't going really well, because now I'm a little negative. All right, so I'm sitting there, and the thing turned right around from that stop out and goes back. So I set my entry point. I'm going on the short side of it. So I set my entry point below the previous entry point, and there was still 20 pips of potential profit target there, even dropping my trade entry point down. And I said, oh, okay, I'll ride with that. So boom, I go back in, and the order got hit. Okay, so I pull one off at 5 pips, and the thing continues to go down, and it just the bottom of the spread hit my order, but not the buy part of the spread. That didn't hit the order, and the thing turns around and goes back up. And then it staggers and it starts to head back down. So I added another order in, so I'm basically 3 again. So I'm trying to stay with this trade. And I turned away, and price just went right. It was a spike, which turned into a pin bar later on the time frame that I'm trading, and just took the gas out of the whole thing. I mean, I went about, I was probably I was negative about a 1.5%. negative. Okay, so this sucks. I don't want to have my second day of the new year been a loser. What I should have done is just shut the platform down and gone watch a movie or something. But I had work to do at the desk, and so, well, I'll just sit there and think about this and see what happens. All right, so we're back at it. I don't know why Bo is sitting down here. That was my wife on the phone, and she's calling from up north. She's doing some business up there, and wanted me to look something up on the internet. I said, sweetie, I'm out in the middle of the woods in a snowstorm. It can't help you out. And the dog is being not very helpful. So anyway, I'm sitting with this trade. I'm 1.5% out, or a situation, and I should have just walked away. I said, walk away. Look, I got to trade my. I got to trade my way out of this because this is embarrassing. So I waited, and I'm looking at the higher time frame structure that price was presenting, and I said, okay, look, we're gonna take one more run at this, because when I backed out to the higher time frame, what I noticed is that the lower time frames that I was on was really a chop. It was really forming a chop, which I was, you can make a lot of money when you're chopping as opposed to trending, if you time things the right way and you're not trying to get 30 pips or something. You're just trying to pick off tiny pips. So I'm in a chop zone, and it looked like that there could be a break out of the chop zone, and so rather than setting my order and carefully staging in, I did what I call a shoot the potatoes trade, and I put the three lots on at my entry point, and my profit target was 8 or 10 pips away, something like that. I mean, the real one was 20. There's a potential, but I just didn't want to screw around with it. I'll take my 10 pips and see what happens. And so I put the full order on at the entry point, and I took the full amount of order off at my profit point. And so I just sat and I watched the thing. I didn't do anything else. I'm going to watch the trade, because if this went badly against me, I could easily go 3% down for the day. Because I couldn't set my normal 8 pip stop, because the structure was showing that I needed 12 or 15 pips. So I had to expand the thing out a little bit. You have to be flexible in this stuff. I mean, I do these trades as a hard stop. You got to do this, you got to do that. Yeah, you don't got to do anything except make money. And so I made those adjustments, and I sat there and watched the thing, and price started to chatter very badly in the rise. And down it starts to come, down it comes, and it retracts up a little bit. I'm thinking, yeah, maybe this will go. And then, man, it shot down through my limit order, took the 3 lots, I'm in, and it just went boom, and it went right to my profit target. Took the 3 orders out, great. Now I'm about 0.5% up instead of 1.5% down. I'm 0.5% up. And it looked like this was a reversal on the trend instead of just a lucky spike. So I put a single order in. That got taken. The thing reversed on me. I took a 5 or 6 pip loss on that. So that I said, I'm done for the day. There's just too much chop. The news is up. There's all these elections going on in the state of Georgia right now in the U.S. that are going to determine the outcome of whether the Democrats or the Republicans are going to have control over the Senate. There's a whole bunch of shit going on, and it's just a clusterfuck over here with these politics. I hate politics. It's just stupid stuff. And I looked down at the dollar index, and it was flapping all over the place. The stock market's all over the place. I'm done. And I'm going to go take the dog for a walk. That's what I'm doing right now, taking the dog for a walk. Where is he? He's back behind me, as you can see. I have to pay attention in the woods here because I don't really know where I am. So I have to be careful so I don't get lost in the woods. So, okay, so you know, I probably should have just got out of it when I was 0.5% up. I didn't, and I lost a little bit, and I ended up 0.3% down. So there was about a 0.8% move in that. In that, it's not bad. You know, when we're in markets like this, the scalping that I do, the day trading, it's not really practical to do that. And the only reason that I didn't go to a longer reference frame was the uncertainty because of the elections and all this stuff. And I thought the intent today in looking at the original charts was just to grab, you know, just grab 5 pips and call it a day. To be happy with that. And I just couldn't get that satisfactorily. And price was just moving around too much. I get captivated by the movie and wasn't paying attention to the message. So that's my story of trading for the day. With the advice or whatever, is that if you are a day trader and you're a scalper, you have to be very, very careful as to when you do that trading, and to not get too wrapped up when the fundamentals are jagged. I mean, generally speaking, you know, fundamentals that's already known out there, and if you have fundamental news that affects it, generally. A longer term trader will be able to say, well, you know, I'm in this trade and it's kind of going against me. I'm uncertain. It's going to get out, and you could be safe. But when you're a scalper, you're a day trader, and you're focused in on the short term charts, you got to black out all of that shit that's around you. And so when CNN talking heads come out and say blah 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 blah, and the stock market drops another 150 points. Or goes up 150 or whatever it's going to do, that price on that 1 minute chart or that 5 second chart, man, it just goes, and you're 6, 8, 10, 15 pips out before you know what happened. And that's why it's so critical, whether you're a long-term trader or whether you're a short-term trader, that you set those protective stops and get out. You know, I keep harping on my 8 pip hard stop rule that I have. And you get a lot of criticism in some of the emails that I get, and just some other stuff that, you know, the stop is too short and you're going to get taken out. You know, you got to set longer term panic stops and all this other kind of crap. Well, you know, you can do all the planning in the world that you want. And I talk about don't go into trade unless you got a high probability the trade's going to be a success. And so the short term stop is fine because I have a good win to loss ratio, so more often than not I'm going to win than I'm going to get that 8 pip stop hit. But to suggest that I should take that stop and move it out to the 20 or 30 pip point where my projected potential profit target is 30 pips, and so I should be able to move my stop out very reasonably 30 pips out. Well, if I had done that today, I'd have been caught in 2 spikes. I'd have been 60 pips down, and it would have been catastrophic. So I just don't buy all that. Pips are pips, and money is money. You know, you can set the panic stop that's way out there. But you got to really manage it in close. And I did. I had both of them. I had the panic stop way up there in case you get hit in a really bad spike, your short stop may not get hit. So you got to have that panic stop, that secondary stop up there that's a catcher that says, yo, whoa, I'm going to catch it at the end. Because by the time price gets up there, you'll have the liquidity maybe to get it, where there might not be the liquidity if a big bank gets in there and all of a sudden they buy or sell a huge amount of stuff in order to move that price radically so that they get a good price. You got to really watch out for this stuff. There are a lot of things to consider as a day trader that you don't consider as a longer term trader. I think I'd rather be faced with that issue than taking the higher risks that the longer term trader has to take. And I'm not talking about more risk, I'm simply talking about more dollar risk. You're taking the same percentage risk, but the dollars are so much higher. I just don't see any need for that. So I traded today. I made, I don't know, 6-8 trades today. And I ended up with a 0.3 of a pip loss. And okay, if I was proportionally out on the longer term time frames and I had spread these trades out over a 4-week period of time, my loss is at 0.3% would have been a lot of dollars, a huge amount of dollars, because of the distance that the dollar value that those losses represented as a function of the price. So I don't know. That's just my opinion. You can take that with a grain of salt or a snowstorm thing, I guess is what I want to say. So I'm going to enjoy the snow out here. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day. And this is what I'm going to be walking into to do the rest of my day.